Let's get you up to speed on everything you need to know at 3 p.m. Eastern Time. First up, bond king Jeffrey Gundlach outlining his top risks for the U.S. economy and warns that the bear market is here to stay. We have the exclusive interview coming up in just a moment.
Plus, the latest Fed minutes showing commitment to keep fighting inflation. Some are repeating that members believe ongoing rate hikes will be necessary.
All right, but let's begin here with the latest check on the markets because the Fed releasing its minutes from the last meeting just about an hour to go. And you can see the impact that it's clearly having on the markets. The Dow flipping back into negative territory for the day. We're looking at losses of just about 132 points as we enter the final hour of trading. The Nasdaq also in negative territory, off just about 0.1%. The S&P off about 0.4%. Of course, the concern here from investors that higher rates might be here to stay for a little bit longer than maybe had initially been anticipating. That, of course, is putting pressure on equities today. Taking a look at the bond market action, the 10-year yield still off just about 3 basis points here, but a bit of movement following the Fed minutes release. Of course, we need to keep a close eye on what the bond market is telling us in terms of the sector action, what we are seeing play out this afternoon. Only 2 sectors holding on to gains. You're looking at materials up just about 0.4%. Consumer discretionary barely holding on to positive territory here, but clearly the biggest laggards coming from real estate and energy sector, Dave, off nearly 1%.
I wasn't really surprised by the minutes. Why were the markets?
I know.
Were you?
They just want any sort of optimism, anything to hang on to. And the fact that we're only off, about 100 points in the Dow, that's not too bad.
Minimal downside there. Thank you.